Ira Epstein of Linn and Associates with your metals market update for this Tuesday, and we're at June 11th, 2019. I'm doing this earlier at 2:11 in the afternoon because we're very close to where the settlement prices of the metals will be, and they've really gotten very, very quiet in the past 30, 40 minutes of trading, so I figured, hey, I can get one of these done. To make a long story short, we're just sitting still pretty much in the dollar index. I still view it as having downside pressure. We have a very mixed bag at this hour, and as I just said, we're only got about 40 minutes left of trading, and the market's been either side of unchanged today a good part of the day. Today is Tuesday. I was looking for a Tuesday reversal. I'll consider it pretty much done because when the market rallied in stocks to the highs, it fell back from them for the lows after the fact. So the market's done its job of at least stalling out. When I look at the gold market, I was looking earlier as to what I had put in my gold report that is now off our website, by the way. It did go off last night. And when I look at it, when we were looking at August gold for our, if you will, our price count, which is like figuring out in a market, when you get a thrust in the market, different levels similar to Fibonacci, that number was around 1336, and as you can see, you're at 1327, and you've been through that 1336 level. You got way up here above it, and you've stalled out against that level. When we take a look at this price action right now, you can see that on this pattern, when I put the swing line, you've got a higher high and lower low. You have stepped out of the trend. The market ran, and that's the only word I could use, ran from the 1270 level all the way up $80, and now the market's giving you a bit of correction off of that. I have pointed out to you that the 18-day average of closes is trying to make an assault on the 100-day average of closes as well. That's all that you can say about it. And when we look at where momentum is, or in price, if the market should continue down, this area could be support. I'm sure I've said that a bunch of days. In terms of momentum, it's turned back down. Not decisively, but it's turned down. You can see how the red line is now starting to drop away. Momentum often leads price, and you can see how prices here are pretty much just stalling at this point. That does not mean I'm bearish. The chart is pretty neutral here. It's hit an upside target and it's in a stall. When you go to GLD, you can see how the market did a similar pattern. It's not quite the same pattern here where you have the higher high and low in the futures. This is still just a higher high in a corrective mode. And you did have something else happen. You had the 18-day average cross over the 100-day, so you have a bullish crossover. Often when you have a bullish crossover, the market tries to get up to a high, the most recent high at least. We'll see if that works out or not in this. GDX is more like the futures market. You've got the higher high, the lower low, but what this market has going for it is if you look at both numbers, I'm assuming the market finishes like this. There's still 40 minutes left today. But if it were to stay like this, you have all these days over 80, so you have an embedded reading, and you came in that way. Today's actually the fourth day of it, and until the red line gets back under 80, the market is fighting with itself because it lost this pattern. It's still trying to hold on to the bullishness that it had. If it loses that, then I look for somewhere between this green line and the red for price to come together. As I said, the swing line stepped out of the trend, but momentum, which I think is stronger of all the indicators, is still pointing up. Have it point down under 80, then you have a different issue. In the gold-silver ratio, it just keeps ratcheting the higher highs, giving back a little and not giving up very much. And you see that in the silver. It's had a big issue with the upper Bollinger Band. And remember, on Bollinger Bands, the key to them is the market will trade within them 95% of the time. The art with them is understanding the first time the market hits it, being on the upside or downside, do you come out of positions or not? Some markets work better than others with it, and at other times I look at to see, are you in a sideways pattern first before you hit it, or did you come from a down thrust to an up thrust? There's a skill level to that. Our charting course does its best to teach you that. In the copper, all you did is rally back to the 18-day average, that line in the sand, and you finished under it. So the market's got one of these funny patterns that I don't know, because right here we came down with this low under that one, and this is always a problem for me in it. I have a higher high, but I also think I still have a lower low in the market. I don't see a trend as the problem. In the platinum market, we're fighting at the 18-day average of closes and have been for quite a while on this downslope. The market has a definitive lower low, higher high, momentum up. The close today is going to be at 814, which is over the 18-day average, and the bias up. I'm going to repeat, still not trending, and what's happening is the Bollinger Band is marching its way down to price, which means resistance coming to price. In the palladium market, you're fighting a battle at the 100-day average. We said this yesterday and the day before, the 100-day average and the upper Bollinger Band. The market is overbought, trying to push out the Bollinger Band of the top side, but having a heck of a time trying to get that done. And in the dollar index, you're still very much in the downtrend, lower highs, lower lows. Support was seen 3 days ago at the 100-day in the lower Bollinger Band. You saw it this time at the Bollinger Band, and you rallied up. And I wouldn't be surprised tomorrow if it has to fight a battle there. But at this point in time, the dollar remains in a downtrend, although oversold. You know, one of the tools that I use during the day to see resistance points in a market isn't a regular chart often. I'll look at a pivot point to get an idea that, gee, I'm putting out this trade recommendation, or I'm going to tell people in the morning as I do my morning videos for my subscribers, hey, I see a support resistance zone somewhere. And at times I'll bring up the pivot point to show how it works. But in a nutshell, it's a formula that we devote one chapter, a video chapter to. You don't have to do the formula, but it's always nice to learn it. The second thing is, how does it plot? This is called the pivot line right here. This is support 1, support 2, resistance 1, this line right here, resistance 2. And the idea is you're trying to sell at resistance zones, buy back at a support line, buy at a support line, sell back at the pivot line. That's basically the concept. What we do with it is we tie slow stochastics into it for momentum, and a lot of people don't do that. And I use that momentum indicator to say, hey, this market could be turning down from a certain level. As I said, there's videos, there's 3 of them. One that teaches the formula, one how to plot it, and then using stochastics and tying it all together. They're free. To get them, give us a call. You can go to our website. On the website, just at that point, click on that free offer. We'll make sure you get the links to those videos. I'm Ira Epstein. You have a good day. Talk to you tomorrow.